Welcome to Multiple Perspectives. This is your weekend view, where we bring you the latest insights and trends in real estate investing. I'm Daniel Brereton. Today, we're taking a look at the impact of post-COVID migration and potential investment opportunities. The pandemic has significantly reshaped demographic patterns, leading to notable population shifts. Non-major metropolitan regions have experienced substantial growth, surpassing their pre-pandemic levels. You probably know of someone that moved from a high-cost city to a low-cost one, or decided to move to be closer to family or friends. I even met someone that has been moving from Airbnb to Airbnb since the pandemic started. In the cities that gained a lot of residents, despite some signs of oversupply, these regions continue to see positive growth, making them attractive for real estate investments. With more people moving to these regions, you might wonder what opportunities are left 4 years after the start of lockdowns. Hard to believe it's been 4 years. The increased demand for rental units continues to translate into higher potential rents and new development starts. And where there are residents, there's often a boost in retail and small business activities. Now, with the proliferation of e-commerce giants like Amazon and Walmart, you might also think that retail properties are unattractive investments. Indeed, the recent drawdown in retail and office real estate has been a signal of the shift in how we work and act as consumers. But in every drawdown, we can often find opportunities. There are a lot of businesses that can't offer their goods or services online. Haircuts, gyms, fresh local groceries, eating out, all of these need to be done in person. And for all the technological innovation from the pandemic era, like Peloton, consumers have kept going back to do what they love in person. Retail properties anchored by grocery stores, in-person activities, and eateries have shown remarkable resilience against the growth of e-commerce. Plus, even though a lot more goods are purchased online, smaller concept stores, which allow customers to try products in person before fulfilling orders online, are also gaining popularity. A compelling way to access the demand for residential and subsequent retail activity is through mixed-use properties. These properties combine multifamily residential units with retail spaces, creating a symbiotic environment where residents and businesses benefit from each other's presence. This type of development not only provides diversified income streams, but also enhances the value of the property by offering convenience to residents and steady foot traffic for retail businesses. Investing in mixed-use developments requires a keen understanding of market dynamics and tenant needs, just like any other investment. Locations with strong population growth, vibrant local economies, and robust demand for both residential and retail spaces are ideal candidates for these types of investments. By strategically selecting sites and offering a mix of high-demand retail services and residential amenities, investors can create sustainable and profitable mixed-use properties. Now, currently on the EquityMultiple platform, we have linked mixed use. This is a mixed-use property in Chicago. The retail portion is occupied by Wingstop, a restaurant, and Van Harden, a barbershop, just like we talked about before. DMG, the sponsor, purchased the property from a merchant builder. The prior owner didn't push rents as high as market rates, and therefore DMG now has the opportunity to unlock a lot of the value from a newly built property. For more information about this or any other opportunity from EquityMultiple, reach out to ir@equitymultiple.com or check the show notes. Thanks for listening. We'll be back in your feed next week with another weekend view from EquityMultiple.
This communication is not to be construed as an offer to sell or the solicitation of an offer to buy any security or provide investment advice. Any such offer or solicitation can only be made by means of the delivery of a confidential private offering memorandum. To the extent that performance information is contained in this podcast, past performance is not necessarily indicative of the future results, and all figures are estimated and unaudited unless otherwise noted.